Hey everyone, my name's Andy. My channel's Finding Value. If you like this content, subscribe, click the thumbs up button, and please leave comments. I use comments to make this channel a better channel for you guys. So today we're going to cover understanding market moves. And I'm going to go into technical analysis and kind of so everyone understands and has a baseline of how markets kind of move in a bull market or even in a bear market. And I'm going to go over some examples that are real time to show you what my opinions are and to see if you see the indications of markets changing either in tops, bottoms, or in strong bull markets. So we'll jump into it here. You're going to lose me. So this is understanding market moves. So markets, they're called impulse moves. So markets move using impulse moves. So what you'll see is you'll see large moves and then they pause. They call this a stair step higher or lower. And you see it all over the place. Stocks, they'll pause or they'll do pullbacks in bull markets. That's where we want to be buying, are in these pauses or these pullbacks in these bull markets. That's called buying the dips. It works both short-term, medium-term, and long-term. You'll see them irrespective of your time scale. And what you want to see in these impulse moves, if you're in an up market, like a bull market, what you're going to see is you're going to see large up days, large candlestick up days, which means that your opening price and your closing price is going to be a very large difference, which is a big up day. So you're going to see large up days, and then you're going to see smaller down days, the small little sell-offs or pullbacks in these markets. And these patterns, they can be seen with strength to the upside if you train yourself to look at them. You can see the strength. You can see volume stepping in. You can see the momentum changes. And I'm going to show you a lot of this stuff of kind of what I mean in bull markets and even on tops and bottoms. So what we want to see is we want to see the buyers control the market. And we want to see them overwhelm the sellers. And that's where you get the big up days and the small down days. And we also want to see controlled higher movements. We want to see big up days and the smaller down days. And that's what I consider to be a controlled bull market. And I'll give you some examples. And keep in mind that going long is an asymmetric bet. When you short a stock, that is a symmetrical bet. Just, an FYI. So here's gold. This is the price of gold. And over the past couple of years, this is 2018 till 2020, you can see this pullback up, this stair-stepping type of pattern. They call them flag patterns too. That's what like big flag patterns or stair-stepping patterns. That means you are in a bull market. That's what a bull market looks like. And gold is exhibiting bull market characteristics. Now, I'm going to step back and we're going to go over the commodity cycle over many, many years. This is 1900 till 2019. And what you see is you see a big move higher and then it pull back or step back. A big move higher, stair step back. Big move higher, sideways stair step back. Big move higher, stair stepping back, right? This is on many, many years. This is a very long-term chart. It's possessing that stair-step pattern where it moves up, sideways to down, move up, sideways to down. And almost all the markets do that. Dow Jones does it. This is the yield percent. You can kind of see it move up and down and cycles through. At tops and bottoms, and that's where we're really interested in because we're looking at a commodity bottom here. What you're going to see is you're going to see volatility everywhere. You're going to see a fight between the buyers and sellers happen. And that's where that volatility comes in. They're swinging back and forth, hitting each other, fighting to gain control of the market. The sellers had control of the market. The buyers are stepping in and they're trying to change the control. And what you're going to see is you're going to see momentum changes. And you can see that in the charts. And what I kind of call it is if you have a stock that's going up, and it's in a groove, so to speak, like it's coming up nice and steady. All of a sudden, it comes off the rails. You see these big down days, like something just smacks it out of its track, and then it gets kind of derailed. That's what we're looking for. We're looking for those step changes. We're looking for the volume. We're looking for the big down days and the small up days if you're looking at a top. big up days, small down days on bottoms. You're going to see volume spike higher at these tops and bottoms. The volumes are really going to come up and explode higher. Let the ratios tell us that relative value, because that is our compass. If we know that the ratio is getting cheap for a certain asset, we start looking at that asset, we start looking for indications of, tops and bottoms. We're looking for volatility, we're looking for volume, we're looking for momentum changes. We're looking for all of that, what I call it confluence or merging of information to come together so everything is aligned for us to take positions in it. And we also want to look at market conditions and how they're changing. Sometimes you can see it with those conditions, market conditions changing, and you can tell that we're getting close to a top or a bottom. And this could be interest rates, it could be the real estate market, it could be many things that can give you indications of a top or a bottom with changing market conditions. Another thing that we should be using is the 50-day moving average and 200-day moving average cross. If we're coming to a bottom, they're going to be crossing, or if we're coming to a top, they'll be crossing as well. Those are also momentum indicators. What I like to use, and what most tops and bottoms are considered Trader Vic 1, 2, 3 bottoms and tops. And I'll show you what a 1, 2, 3 bottom and top reversal is in the next slide. And also, the way things move matters. It tells us signs, the momentum, how big up days, and how the market is moving. You have to pay attention to all of this if you want to be a good trader. I am a trader only to enter investment positions, and that's what I use the value for. It will also give you confidence to stick things through a bottom or a top, because if you don't know any of this stuff, you're just going to be whipsawed all around, and you're not going to know really what's going on. So this is what a 1, 2, 3 top reversal is on the left, and a bottom reversal is on the right. You have an uptrend and you break that uptrend. That is step number 1, is breaking the uptrend. It's a trend line break. You pull back. Number 2 is a lower high. So this is a high, this is a lower high. That's step number 2. And then you create a lower low. So you break through this low here, and now you have a trend reversal, because now you have a low, you have a lower, or you have a high, you have a lower high, you have a low, and you have a lower low, and this indicates a trend reversal. The same exact thing happens on a bottom. You break the trend, you break through it, it pulls back, you have a higher low, and then you make a higher high, which is a trend reversal. And that's what we're looking for in these chart patterns. And some examples in real time is Tilray. This is a cannabis stock. You can see this big downtrend. I put a trend line here. And there's a couple of things, since I look at charts a lot. This was a top up here. And you can notice this volume change, right? Broke down, it broke through this trend line, and then it proceeded to go down, and you can see the volume here. So this here is a top, and you can see it go all the way down. You can see the volume kick up here, right in here. That was that COVID sell-off. And you can also see a bunch of volume stepping in now. One thing that you can notice is this is the downtrend, and we're coming right up on this downtrend. And the reason I think it's going to break this downtrend is, one, we've got a low here. We've got volume stepping in. If you zoom into this, we have very big up days and small down days all through this portion of the chart. Then you've got higher low. It's coming up and creating a flag pattern kind of right here. I think it's going to break to the upside, and we're going to have a new step 1 of a trend reversal. And I think this is going to reverse. So that's why I'm getting bullish on Tilray. Apple stock, this is the exact opposite. I'm looking for a high. Now this is a high here. This is a lower high right here. We broke the uptrend here. You can see that uptrend here. We broke it, back tested, coming back down. And if it breaks this bottom here, we're actually in a new downtrend for Apple. Not a lot of people are looking at this. Look at the volume stepping in here as well. We're getting all this information is bombarding us, saying, hey, look, this might change. And you can see big down days all sprinkled throughout here, and then smaller up days. Big down days coming through with the small up days. This isn't looking good for Apple. We'll go to SM Energy. We've got a downtrend here. This is a big downtrend way back here. This is coming from very high levels. But what you see down here is you see lots of volume step in. Right here, this line I drew in here, it's a step change. Big up day, small pullback, big up day, small pullback, big up day, small pullback, and then it just bleeds off. And we bled off to a higher low. This is where I got bullish, was right in here. $1.50 is where I was just boom, in, buying. It came back down, bullish engulfing higher. We broke this downtrend. We had an earnings release here too. And you'll probably see it pull back small, big up days, pull back, big up days, pull back, and go higher. If you look at this from a very big picture perspective, this is step one. We pull up, we pull back. Step two is a higher low. And then if we break this up here at $6, $7, that is step three, and we'll have a big trend reversal. That's what I'm hoping for, and I'm being ultra aggressive by going in and buying down here off this trend line break. Because I was anticipating this break. I saw confluence with the rest of the natural gas stocks, and I just went in and I started buying like hell at $1.50. So that's SM Energy. Now, there's also where we have a downtrend, we can have this triple bottom here on big chart patterns. MCF, Contango Oil and Gas, what we see is step one, second bottom, and then a third higher bottom, which means that this has got a lot of power behind it. So I'm hoping that this is a triple bottom and that this is going to extend higher, because we've seen the natural gas companies all go higher. I think oil's starting to bottom. You can see it in the oil stocks. They're starting to show some life. You can see it in the momentum indicators. You can see it in this big volume all down here. People are accumulating all in here of shares. We've got confluence. I think this is probably going to be a triple bottom here for MCF, Contango Oil and Gas. And hopefully I'm right. So again, we want to invest against the herd. We want to invest when the ratios are green and everything is of good value. And we want to change and even though the ratios are green, we want to make sure that market conditions are changing into a favorable tailwind for our investments. That's interest rates, real estate, and housing starts. Right now, we've got increasing housing starts into an expansion phase for real estate. We have increasing interest rates, which is basically verifying that we're going into an expansion phase for real estate, and we're going to see an inflationary period. We've got technical patterns that are showing broken downtrends across many sectors in the commodities area. Oil and natural gas, uranium. We've got a bunch of base metals and precious metals that are all showing that they're going to go higher. The market is telling us that we are right with the commodities pick, because we can see it across the entire breadth of commodities almost. Everyone else in the world can tell you that you are wrong, but the market is telling us that we are right with this pick. So it doesn't matter what people say. It doesn't matter what story they conjure up from their brain or from whatever data that they have. The market right now is telling us that it's going to go higher and that inflation's coming based off of many indicators in the market. So I'm betting on the people who are buying all of these stocks that they are right, so to speak. They and their voice can be seen in the charts. And those voices are what I listen to. I don't listen to an individual with an expression or some data. What I like to see is confluence, where you have data that supports the market and the market supports the data. So all supporting evidence is in favor. We go with the data and what it's telling us. We can't make up things and hope and pray that things go differently. We have to go with what the data is telling us. Do not listen to other YouTubers or people with PhDs or anything. Listen to yourself. Test everything that I'm telling you. My theses, my strategies. Don't just listen and take it verbatim, because I don't think they necessarily know what's right. And that's why I created this channel, is because I got so peed off at listening to some of these YouTubers and going, man, they are so wrong on this. That's why I created this channel, to help everyone else with their decisions, investment decisions. And when I'm talking about ratios, so here's ratios, and this is a very rare opportunity to buy something where all the ratios align like they are. The stars are the current ratios of 2020 that we have, and the rest are averages. platinum to silver, platinum's cheap, platinum to palladium, platinum's cheap, platinum to gold, platinum's cheap, rhodium to platinum, platinum's cheap. Whenever you have platinum, that's cheap against all of the other metals, and you can look forward and look at the demand for platinum. This is a very good setup for platinum. It's very rare that this happens. It happens once every 4, 5, 6 years, and this is when you really got to load up. Here is the Dow to gold ratio. You can see this thing kind of tracking sideways in this channel, this channel here, this pattern. Once this breaks to the downside, we're going to see fireworks, guys. This is going to be big. Big moves for mining companies, big moves for all of the ratios, because all of the ratios that are cheap in relationship to gold typically over time will become expensive to gold. They're going to rotate from cheap to expensive at market tops for commodities. And that's where we get our purchasing power gains against gold, against the Dow, against any other assets in the world, is that reversal in the ratios. And here's dollar TNX. This is your 10-year treasury yield. It looks like we're going higher. I was calling that we're going to go higher, back here just by looking at the momentum changes. Big up days, small down days. You can see it all through here, and we're heading higher. This typically means that inflation's coming, and if precious metals takes off, that means that we're in a negative interest rate environment, that inflation's already here. When we look at some of the real estate, this is real estate here. I've got median days on the market here, total listings year over year, and the median listing price. And when I just took a snapshot of some of the higher, that's why I have all A to H. I just took a snapshot of this. But everything is selling faster. The total listings is declining like mad everywhere. And the median list price is all going far higher. That is more confluence for inflation. So I'm just looking at market conditions. I'm looking at real estate, and I'm trying to make opinions and strategies based off of what the data is telling me. And then, you got to develop confidence. It took me a while to block out everyone else. I used to listen to those that had PhDs in the field, finance professors. I listened to elders who've lived through some cycles. And I made a lot of wrong decisions because I didn't realize I was better prepared and more informed than most of these people that had PhDs and many of these elders. I had the right data, and I didn't act on the data that I had. I didn't have that confidence, that self-confidence. And knowing this stuff inside and out is going to give you the confidence to not really listen to anyone else but yourself. And then you keep testing your theories, your strategies. You need to seek those who've done it before and learn from them. If they haven't done it before, if they're just a professor and they're not a multimillionaire off of making investments, they probably don't know what they're talking about. And I'm not trying to come off like I know everything. What I'm trying to say is be careful what information you pick up on. Because those who've done it, you're going to learn a lot more and a lot quicker than those who haven't. And you find out that most people don't know deek about anything. Verify your thesis and strategies with data seen in the market. And look for confluence. Look for a merging of many things that are aligning for your investments. Because in commodities, you can't really win in a massive bear market in commodities. You have to make sure that you have the conditions right and that everything's lining up for a commodities boom to happen. You can't make something happen that's not there. And here, this is the last slide. This is kind of what I think is going to happen in the commodities bull market. You're going to have the stealth phase, an awareness phase, and a mania phase. A lot of the gains are going to happen later on in this bull market. They're not going to happen right in the beginning. It's going to take some time. It's going to take some patience to make money here. We are buying in this stealth phase. Not many people are talking about it. This is called smart money. You can see right here, smart money. And we've got institutional investors and then the public. The public's not in here. They don't know anything about oil and natural gas and any of these things. They don't care yet. The moves aren't happening, so they're not attracted to the moves because retail investors look at shiny things and they say, ooh, it's shiny. Look, it's got some movement. I'm going to go chase it. They've got the chase going on. So we're in the stealth phase. Keep in mind that the ratios can be green and we're still going to get short-term market movements up and down. You're still going to have to endure moves that could be 20, 30, 40% moves. But keep in mind, bottoms their signatures are volatility. Understand that you are on the right side of the trade by knowing the value of what you have. and what the potential value could be and what the market conditions are saying. Because if you get the market conditions right and you understand where you are value-wise, you understand where the market is going, and all of the indicators, your leading indicators, are showing you that it's going to go higher and that we're going to come through an inflationary period. We've got real estate going in an expansion phase. We know all this. If you don't know this, please check out my other videos. If you know this, it gives you the confidence to load up on undervalued assets and hold on through this entire cycle here. That is where life-changing investments are made. If you don't understand it, if you don't understand market conditions and the value, you're not going to be able to have life-changing investments in a very short period of time. This is Finding Value. Hopefully this clip ties some more stuff together, gets you a little bit better on how to understand market movements from a technical perspective, momentum, bottoms, tops, all of those things. They're all extremely important because it gives you more confidence to hold on through thick and thin. If you like this, subscribe, comment, and hit the thumbs up button. Thank you.